What's up, everyone? Welcome back to Forgotten Finance, where lost money lessons come back to life. Picture this. It's 1757, and a private company just conquered an entire subcontinent. Not a government, not an army flying a national flag, a corporation. The British East India Company didn't just sell tea and spices. It controlled more territory than most European empires, commanded 250,000 soldiers, and generated revenue that would make today's tech giants blush. But here's the twist that'll blow your mind. The financial system that powered the British Empire wasn't built on gold vaults or royal treasuries. It was built on debt, clever accounting, and a money machine so sophisticated that Wall Street still uses its playbook today. Most Americans learn that Britain ruled the waves and the sun never set on its empire. What they don't teach you is how Britain paid for it all. Because here's the dirty secret. They didn't. At least not in the way you'd think. The British Empire wasn't rich because it had money. It was rich because it invented entirely new ways to move, multiply, and manipulate money across oceans and centuries. Let's start with the foundation. In 1694, Britain was broke. Flat broke. King William III needed cash to fight France, but medieval kings had a nasty habit of borrowing money and then, well, not paying it back. So who would lend to a government that might just execute you instead of repaying the loan? The answer was brilliant and terrifying. Create a bank that would lend the government money, but in exchange, that bank got to create money itself. The Bank of England was born, and with it, the concept of permanent national debt. Instead of paying off loans, Britain would just refinance them forever, paying interest but never the principal. It sounds insane, but it worked. Suddenly, the government had infinite cash flow, as long as people believed Britain would keep paying interest. But creating money was only step one. Britain needed to move that money across the world, and that's where things get really interesting. By the 1800s, Britain had perfected something called the Bill of Exchange. Imagine you're a cotton trader in Charleston, and you want to buy textiles from Manchester. In the old days, you'd have to physically ship gold across the Atlantic. Risky, slow, and expensive. Bills of exchange changed everything. You'd write a promise to pay in 90 days, and a British merchant bank would guarantee it. That piece of paper could be traded, sold, and used as money itself. London banks became the clearinghouse for the entire world's trade. American cotton, Indian opium, Chinese tea, all of it flowed through London's financial district, and Britain took a cut of every transaction without moving a single gold coin. Now here's where it gets darker. The empire didn't run on fair trade. It ran on forced trade, backed by military power and financial manipulation. Take India. The British East India Company didn't just conquer India militarily, it conquered it financially. After the Battle of Plassey in 1757, the company gained the right to collect taxes in Bengal. Think about that. A corporation collected taxes. They used that tax revenue to buy Indian goods, which they sold in Europe for massive profits, which they used to pay dividends to shareholders back in London. India was literally paying for its own colonization. The money flowed in a circle. Indian taxes bought Indian goods, which were sold to Europe, which enriched British shareholders, who then invested in more colonization. It was a perpetual motion machine of wealth extraction. But the British were even smarter than that. They created what economists now call imperial preference, a trade system where colonies were forced to buy British-manufactured goods and sell raw materials only to Britain. Indian cotton went to Manchester, got turned into textiles by British workers using British machines, and then got sold back to India at inflated prices. The colony paid twice, once for the raw materials Britain took, and again for the finished products they were forced to buy. It's like if Amazon took your crops for free, made them into products in their warehouse, and then charged you retail price to buy them back. And if you refused? The British Navy had something to say about that. The financial infrastructure got even more sophisticated. Britain created the gold standard, which meant British pounds could be exchanged for gold at a fixed rate. This sounds fair until you realize Britain controlled most of the world's gold supply through its colonies in South Africa and Australia. Other countries had to earn British pounds to participate in global trade, which meant they had to sell things Britain wanted. at prices Britain set. It was economic hegemony disguised as a neutral monetary system. The dollar's role in today's global economy? That's the same playbook, just with different players. Sterling became the world's reserve currency. If you were a Chilean mine owner, an Egyptian cotton farmer, or a Chinese silk merchant, you needed British pounds to do business. This created what economists call seigniorage, the profit from printing money. Britain could literally print pieces of paper, and the world had to accept them as valuable because global trade demanded it. It's the ultimate scam. Create paper, call it money, watch the world labor to earn it. The empire also pioneered modern insurance and risk management. Lloyd's of London would insure slave ships, tea clippers, and opium cargoes. If a ship sank, the financial loss was distributed among hundreds of investors, so no single person went broke. This allowed Britain to take massive risks, invading countries, starting wars, launching exploratory voyages, because the financial downside was pooled and manageable. Meanwhile, the upside, new colonies, trade routes, resources, went straight to Britain. By the late 1800s, Britain controlled about 40% of global trade, despite having only 2% of the world's population. They did this without having the world's largest economy or biggest military for most of that period. What they had was the world's most advanced financial system. Credit networks, insurance markets, stock exchanges, banking relationships. These were the weapons that conquered the world. Violence opened the door, but finance kept it open. And here's the final kicker. When the British Empire finally fell apart after World War II, the financial system didn't disappear. It just moved. The institutions, the practices, the networks, they all migrated to New York. The International Monetary Fund, the World Bank, the dollar replacing sterling as reserve currency. It's the same imperial financial architecture with a new flag flying over it. Britain showed the world that you don't need colonies if you control the money. You just need everyone else to need your currency, your banks, and your markets. The British Empire's greatest trick wasn't military conquest. It was convincing the world that their financial system was natural, neutral, and inevitable. And we're still living inside that trick today.